And what's up, you guys? Welcome to the Mango Grove. My name is Krisha, and this is today's Bitcoin analysis video. Now, today's agenda, guys, I'm going to keep this rather straightforward. I think the number one question that everyone's got on their minds is this, right? Does Bitcoin pull back here? I'm noticing that a lot of people are not positioned, and I feel like a lot of people were not expecting the volatility to kick in this immensely. Now it has, so this has caught a lot of people off guard. So we'll be essentially analyzing the lower time frames as well as the mid time frames, okay, to really assess whether or not we could actually see a pullback here. Alrighty. Now the second point on today's agenda is going to be this. The first bull market signal has officially been activated. We closed a very important candle today, or rather we opened a very important candle today. So yeah, we'll be discussing the signal that just got activated, okay? And the third point on today's agenda is this. What could turn the picture bearish? Now, I have left this for the end because what I'm about to present to you today is going to be more on the fundamental aspect of things. And if I really had to prioritize technicals versus fundamentals, I will always prioritize technicals. Okay, price action ultimately is also a derivation of fundamental analysis because ultimately, guys, it's buying and selling on the chart. It's not just numbers. You're dealing with human beings here. You're dealing with all of their actions combined. Okay, it's a collective consensus that we see on the charts on a daily basis. So technicals first and then fundamentals. So yeah, this is going to be today's agenda. I will be including timestamps in the description below. Now, before I get into the analysis, I just want to mention one quick housekeeping thing. The 21 under 21 discount code has officially been deactivated. I know a lot of you guys reached out to me after it was deactivated. Unfortunately, guys, it was running for a very long time. So it's been deactivated. However, the discount on the Mango dashboard has already been baked into the pricing. Okay, so we are still going to be running this tentatively, so there's no end date for now. However, when we do decide on the end date, I will be giving you guys a 1 week heads up. Alrighty, so you can still take advantage of the discount on the dashboard. Alright, so that we can get into the chart. Now, of course, guys, it goes without saying, if you have been liking the content so far, that like button goes a very long way. So go ahead and smash the like. But hey, if you want to wait until the end to see if you derive any value from here whatsoever, then by all means, you can wait until the end. Now, of course, we're going to start off with point number one, okay, which is, can Bitcoin actually see a pullback here? Is there any setup for a potential pullback? Now, I'm going to call a spade, and I'm going to just say it out loud. I'm saying that the bulls actually still have the edge here. I'm seeing very little resistance between where price is at right now and the next target. Okay. Now, my last video with you guys actually gave you brand new targets, right? And those targets were adjusted for volatility that just stepped in here, right? So let's go ahead and bring up those targets. And there we are. So the first target that I brought up with you guys was $20,859. Okay, and the second target to the upside was $22,944. Now, for those of you who have been watching my videos for some time, you guys know exactly how I like looking at these targets. If we clear one to the upside, okay, hold it as support. I am seeing strength along support at that point. I'm saying that the bulls have the edge here, and the next likely, most high probability move would be for the bulls to take this up to the next point of resistance overhead, which only comes in at around 22.9K. Okay, from where price is at right now to 22.9K. That's a good 8.52% still to the upside. Okay, now I'm sure that many of you guys are thinking that, yes, Krisha, we know that Bitcoin is bullish. We know that the bulls have the edge here. We know that that's where the probability is swinging at right now. You don't need to tell us that. Tell us about the next pullback opportunity. Well, I first wanted to make sure that you knew that the winning probability right now is still with the bulls, okay? They still have the edge. I think that's very important that I communicate that with you before I actually, I give you the pullback plays, okay? So as far as the pullback is concerned, guys, do we have resistance over us right now? Yes, we do. Is it a lot? Absolutely not. Okay, it's very little, but some of it is important. So I'll tell you what resistance we have over us that could potentially lead to a pullback. If we do get rejected, we could see this melt down a bit more. Okay, but now here is the resistance that I have found so far. If you found anything else, please let me know in the comment section, but here's what I found. If I take you guys on over to the 4-day time frame, okay, and I put on my mango ribbon, you'll see that we're currently living right up against that 55 exponential moving average, which is that green EMA on my chart. Okay, so now we're smack up against that. How has that fared in the past historically? I mean, I did some basic back testing and it's been okay. Okay, there's been some chops, there's been some fake outs, but for the most part, it has performed relatively well. Okay, you can, it's reliable to an extent. Is it the most reliable? No. Okay, it's decent, but still, resistance nonetheless for now. This resistance is coming in at around $21,536. Now, in addition to the 4-day 55 EMA, another region of resistance that we have over us can be found on the weekly time frame. Okay, get on over to your weekly. For those of you who have access to the dynamic indicator, go ahead and switch on your dynamic indicator, and voila. Now, this has been very, very important, and this has had amazing playthrough. Now, just to give you guys some insight on how amazing the playthrough has been on this region of resistance, please notice, now this was the breakdown from $60,000. We broke down below the dynamic, okay? This is where we got rejected off of resistance, came down. Once again, rejected off of resistance, and then that was a nice, beautiful meltdown. I believe this sort of lined up with the whole 3AC fiasco that happened. But anywho, the next time we actually found ourselves up against the weekly dynamic, once again met with resistance, resistance, resistance. So this has worked out really well. So I'll be really watching as to how price reacts off of dynamic resistance. The dynamic resistance, if you guys want to take down the number, the exact number comes in at around $21,500, $519, I believe. Okay, so you can go ahead and take that down, but that is dynamic resistance as well. Now, in addition to these two immediate resistances overhead, another bearish tilt for Bitcoin right now that could allude to a pullback is going to be found on the Mango dashboard. Okay, I'm currently on the daily time frame. The trend is currently long. You got this long signal 1 week ago. Okay, what was price when this went long? Price was actually sitting at 17,183. And if you're someone who actually managed to catch a trade on that level, you're up by a good 22% on that trade. However, what is alluding to the pullback here is the volatility. When you see volatility flashing these high 90 numbers, that's telling you that the move is very, very frothy and we could expect a pullback sometime soon. Now, what we need to understand and really establish is that where is Bitcoin really trending at what time frame? And that time frame, guys, believe it or not, is the 4-hour time frame. Okay, this is the 4-hour right now. And yeah, Bitcoin is currently trending on the 4-hour time frame. So in order for us to really anticipate a pullback on here, we really need to assess the 4-hour. Okay, now as far as the dashboard is concerned and Bitcoin is concerned on the 4-hour time frame, Bitcoin USDT currently long. Okay, however, volatility flashing 69 and dropping. Okay, telling us that this is going into a range of consolidation. However, it is a very, very tiny range of consolidation. Alrighty. Now, when I usually see this and I see a long trend signal, I will still say that the bulls have the edge. Okay, for me to expect a much more deeper pullback from Bitcoin on these lower time frames, I want to see this trend flip neutral. If it flips neutral, that's when I will be expecting a deeper pullback on Bitcoin. But for as long as it remains long, I will be only expecting shallow pullbacks on the chart. Okay, so now I'm going to propose two sort of scenarios to you for pullback opportunities, wherein one is a shallow pullback, still maintaining the 4-hour uptrend, and one is a deeper pullback. Okay, for that, we can get on over to the chart. Now, for the shallow pullback, I've already given you my levels at the very, very beginning of this video, which comes in at around 20.8K, the first level, and the second level coming in at around 22.9K. Okay, as far as my shallow pullback is concerned, I'm looking at a range. Okay, if we see this come down further, there we go. I'm looking at this tap zone. Okay, we're going to call this the bid zone on the shallow end. So now if that dashboard volatility plays through, okay, and Bitcoin actually sees a pullback here based on the frothiness of it, this is going to be the first pullback opportunity getting into the 20.8K region, going all the way down to 20.6K. If you want to get greedy on your bid, then 20.6K would be the bid to be had. If price breaks that, that's going to be the level that you manage your position off of, okay? That's going to be the invalidation. You are wrong on catching a trade on that level if price breaks that to the downside. Okay, if you're taking a long position on 20.6K, you're looking for continuation to the upside. If we break, you have been invalidated on your trade. Keep it simple, stupid. Okay, make sure you have your invalidation criteria right in front of you. So that is going to be the shallow pullback. As far as the deeper pullback is concerned, what we need to analyze is a signature that's being established on Bitcoin's 4-hour trend. And here's the signature. As if I zoom out of this picture, you'll notice that Bitcoin has actually been trending so well on the 4-hour 21 EMA. Okay, every test of the 4-hour 21 EMA has been met with a swift pickup by the bulls. Alrighty. I'll say this, I'll be expecting a deeper pullback as soon as Bitcoin actually takes out the 21 EMA. And notice what 21 EMA is actually lining up with. It's lining up with that 20.6K region. Okay, we start taking out 20.6K to the downside, aka also 21 EMA. At that point, I'll be gearing up for a deeper pullback on the chart. We could actually expect a C-span trade at that point from the Tenkin going all the way down to the Kijun. The Kijun, guys, comes in at around 19.1K. Okay, I mean, that would be a real sick bid to capture. But yeah, that would be the move that I look for. Okay, but this is contingent. The deeper pullback is only going to come to us contingent on us losing the 21 EMA on the 4-hour time frame. That is the signature right now. That is the uptrend signature. Okay, I'll be looking for that. And also for your first signs, guys, look towards the Mango dashboard. As soon as this 4-hour trend flips neutral, that is also going to be your signature in that, okay, the bulls are losing their steam. At this point, we could expect a bigger pullback on the 4-hour, based on the 4-hour time frame trend. Okay, so this is the two pullback opportunities I look for, wherein one is a shallow pullback wherein the bulls still have the edge. Okay, we might just get a tap on this region before they take this up further. What is the target to the upside? Most immediate target, guys, 22.9K. Okay, however, if the bulls actually lose the 21 EMA, the bears take over from there. At that point, I'll be expecting a deeper pullback. Okay, the next target to the downside only comes in at around 19.1K. Now, just a quick note on the shallow pullback, guys. Just look towards your 10 simple moving average to expect the shallow pullback. As soon as we start breaking the 10 simple to the downside, so we have candle closes underneath the 10 simple moving average on the 4-hour time frame, you can expect the shallow pullback on the chart. At that point, I will be gunning for 20.6K. Alrighty. Now, this sort of wraps up point number 1 as far as pullbacks are concerned. Now, I want to take us to point number 2, which is going to be very, very brief. I told you guys that I'll be going over certain, bull run signatures, right? As soon as we get a confirmation on one, I'll make sure to bring that up to your attention. So we did get a confirmation on the first bull run indicator that I was looking at, which was actually on the 4-day time frame. So if I take you guys on over to the 4-day time frame and put on my Mango dynamic indicator, I was actually looking for 2 confirmed candle closes over the Mango dynamic on the 4-day time frame. Okay, now we finally have that. So this was the first criteria. Remember, we were looking for 3, right? First criteria that we were looking for was on the 4-day dynamic, so 2 confirmed closes over the 4-day dynamic. Okay, the second one was we were looking for on the 3-day dynamic plus the 55 moving average. Okay, 55 MA. And then the third criteria that we were looking at was going to be found on the monthly oscillators. Okay, now from the 3, we only have a confirmation on one, which we just received today. Okay, which is on the 4-day dynamic. We have yet to receive confirmation on the other 2, so just a quick heads up on that. So now we officially have 2 confirmed closes over the 4-day dynamic. Now, what does this really help me with? This essentially helps me with really analyzing when has the music either, number 1, stopped playing, or when is it about to, begin. Okay, now that essentially gives me an indication whether or not to go risk on or risk off. Now, just to give you a heads up on how well it's sort of panned out. Now, this was during the COVID dump. As soon as we took out the dynamic to the upside, 2 confirmed closes, that essentially initiated that run, right? That told me that, hey, the music is about to start playing, time to go risk on. All right, so now that was a run all the way up to $60,000. Every sort of visit of the 4-day dynamic indicator was met with support. Okay, until we broke it, this was our first signal in that, okay, the music is about to stop playing. Perhaps it's time you start considering the other side of your trades. Okay, what is your contingency in case we are now propelled into a bear market? Right? So that's the tip that gives me. That is the initial tip that I usually look for. Now, once again, as soon as we lost the dynamic here for, the second time, that sort of initiated the throw into the bear market. Okay, the first sort of test of it was sort of a bit of a bull trap until we broke back down, used it as resistance, and now we've been sort of underneath the dynamic ever since. So last time Bitcoin was over that region, we were sitting at around $46,000. This is the first time since then that we've actually managed to get not just one, but two confirmed closes over that region. Okay, every other attempt at taking out the 4-day dynamic was met with resistance. So number one, as far as confirmations are concerned on going risk on, is here. Okay, so this has been officially ticked off the list. So yeah, just a quick sort of update on that. Now, as far as the third point on our agenda is concerned, I told you guys about, at what point does this entire picture turn bearish? Is there a hinge on that? Now, yes, there is. Okay, now this is going to be primarily based on monetary policy as well as, the FOMC meetings that have been taking place almost every month. Right, now this is something that Sean and I have been covering, for a very long time now. Now, as far as monetary policy is concerned, now why is that important? Well, that is going to dictate interest rates. Why are interest rates important? Well, ultimately, guys, interest rates is the price of money, okay? Interest rates will basically help us determine whether to go risk on or risk off at any sort of given point. But what's happening right now? Now, while there's been, instances in the past when rates have actually gone up, the price of money has gone up. But hey, markets, okay, so rates have gone up, but markets have also rallied. Okay, so that's fine. But what we're seeing right now is there's a sort of a recipe that's cooking at the back, okay, with the Fed, which is, yes, they're increasing interest rates, okay, on a monthly basis. Plus, they're dabbling in QT. Okay, this is not over, guys. Quantitative tightening is not over. What is QT? What is quantitative tightening? Well, they're effectively removing liquidity from the market every month. Okay, they're taking out liquidity from the market. Now, what you need to understand is that now I had sort of gone back in time, and I'd gone back in time, and I was looking at these various turns in the market. So we had this turn right here. We had the turn that came in on 2015. Now, what happened right here in the month of Jan 2019, was that Jay Powell actually came out. Jay Powell was the Fed chairman there as well. Okay, he came out and he said, you know what, guys, we're going to be stopping. Literally, he said we're going to stop in one meeting. Okay, he did not do this over a series of meetings. In one meeting, he said we are going to stop raising interest rates. Okay, so interest rates, they're going to stop that. They won't be raising that anymore. Okay, in addition to stopping the interest rate hike, they also said that they were going to stop quantitative tightening. In one fell swoop, they basically took out all of the downward pressure on liquidity. Okay, so this was a very, very bullish tilt for the markets in general, and I'm looking at that as a momentum play. Ultimately, markets too, it's like they're like vectors, right? So you have magnitude and then you have direction. When they come out right there, the Fed is literally telling you that they're not looking to take out any more liquidity from the markets. You play to that tune. Okay, that is you not fighting the Fed. That is you playing alongside the Fed. When there's QT in this juncture, as well as a hike in interest rates of every month, I feel like, you're sort of fighting the Fed at this point. But what happened here was very, very different. It was the opposite of what was happening here, right? So there's that sort of recipe cooking at the back. Now, in addition to that, what happened in 2015 was that we were going through a very, very slow economic period over here. There was no QT, okay? Also, there was very, very low interest rates. Okay, so this too was a good recipe for liquidity. Great for liquidity, plus. Okay, so we do not have that in this juncture of the market, unless, of course, Jay Powell comes out in 2 weeks and says that he's going to be stopping QT as well as the rate hikes. Right, so right now I feel like this is something that we're sort of fighting against. However, like I said, these things are very, very nuanced, and they can have so many other facets to it, so many other variables to it. Now, one more plausible play wherein we could actually see a retrace back into around that 18.7K region is if, okay, this is 18.7K. Let's go ahead and, smack that on the chart. Okay, we can see a revisit of 18.7K, or maybe even perhaps lower. That could be on the books if 2 weeks from now, Jay Powell comes out and says that, hey, instead of raising rates by 50 basis points, okay, which he did last month, he is going to increase it by 75. Okay, which he had been doing prior to December. The 75 was status quo. If he returns to this status quo, people, that's going to send the market spiraling down once again, in my opinion. Okay. And of course, that's up for debate, but check this out. If I take you guys over to the CME watch tool, I want you to notice that 91.2% of people think that he's only going to increase it by 50 basis points. And just 8.8% of people think that he's going to increase it by 75 basis points. This has not been priced in at all. Okay, what has been priced in, and even then some after that, is this, an increase of 50 basis points. Alrighty, so I think that's gonna, if there's anything that's gonna send the market spiraling down once again, is if he comes out 2 weeks from now to say that, you know what, he's going to be increasing it by 75 basis points. I think that's gonna add a bit of a shock factor. So yeah, that is something to keep your eyes on. Right now, the monetary recipe is not as conducive as it was during the turn at 3K and the turn at around this $200 level that happened back in 2015. Okay, so I think that's something to sort of watch out for. That could be the bearish hill, but ultimately, guys, I've always said this, I'm going to say it again, let price be the arbitrator of all debate. There is so much truth to that, I cannot stress it enough. Okay, so ultimately, let your TA decide for you. That's why we have the bull run signatures that I will be going over as soon as we get more confirmations on them. Okay, let that guide you. Let that guide your trades, let that guide your long-term investments too. Alrighty. So, yeah, this is all I have for you for today. If you guys like today's content, make sure to smash that like button. Please, guys, it goes a very, very long way. And I will be linking the video where I go over the 3 bull market signatures on this end screen. So go ahead and check that out if you haven't already watched it. And I will see you now in the next update. With this, trade safely, trade stress-free, trade the mango way, trade the easy way. Ciao, you guys.